I'm sorry I did not start recording the class from the onset. All right. So as I was saying, I said I taught you guys that when using the Fibonacci retracement, you have an off-trend move. You get to use your Fibonacci retracement to measure the retracement. All right. And then if you have price below your 0.5 level, okay, then you should go in for a buy. All right. Now, this whole idea of the Fibonacci retracement, okay, now it is actually referred to as what? In this concept, it is referred to as the liquidity metrics. Okay. Now, talking about the liquidity metrics, you have to understand that from your zero level, from your zero price level, yeah, from your zero price level to your 0.5, it is referred to as your premium level. All right. It is referred to as your premium level. It is referred to as your premium level. And then from your 0.5 downwards, okay, from 0.5 downwards to the level 1, okay, is referred to as what? Your discount. All right. So whenever you have price trading below your 0.5 level on an uptrend, okay, it tells you whenever you have price trading below 0.5 level, it means price is at discount, and then you can actually look for buys. It means around this region you can get to have good prices for buy trades. All right, that's the whole idea of this. Now, this is called the liquidity metrics. You want to only look for buys when you have price below your 0.5 level, because that is when you're going to get the best buying prices. All right. Now, when you want to buy something in the market, you want to buy at the best price. A normal person will want to buy at the best price. Okay. You want to buy at the best discounted rate as possible. So it is the same thing here. This liquidity metrics above 0.5 level is what? In an uptrend is what? Premium. It's expensive. We don't want to buy at that expensive price. We want price to come down below 0.5 level, which is what? The discount level, and then we're going to be buying from there. All right. Now, if you get to bring this Fibonacci ideology, okay, and this liquidity metrics I just taught you guys now, all right, I told you guys something earlier. I said confluence. I told you guys something. I said confluence is very important. All right. It's very important when you are trading. All right. Confluence is when you have so many things telling you, hey, go in for a buy. All right. Now, whenever you bring in when you bring in this concept, all right, of Fibonacci retracement, there are other things. There are other things that you need to put in place, okay? And gradually, I'm going to be teaching you, I'm going to be teaching you guys this thing, and liquidity is one of them. All right. So let's assume you have price. Do this now, okay? Let's say you have price, do this. Now, normally price will not just go down in a very smooth form. We're going to see something like this going on in the market, blah, blah, blah. And then, you get to see price do what? Break above. Okay, let me say we have a swing point of this nature, all right? And then you get to see price do something like this. All right. Now, at this point, we've had a break of structure here. Now, you have to be keen enough, you have to be careful enough to analyze internal structure. Now, when I'm talking about internal structure, basically, I mean you have to be careful enough to analyze what is happening on this part of the chart. All right. We have a swing point right here. Now, you have to be able to analyze your internal structure. I've taught you guys internal structure. Okay. Now, we're not talking about the swing points. We're talking about the inner swing highs and lows. So you have to be careful enough to analyze this part. Now, this is where you get to know that, okay, at this point, we have equal lows here. We have what? A low here. And from what I taught you guys yesterday, what is resting below these lows is what? Sell side liquidity. What is resting below this equal lows is what? We have equal low liquidity. Sorry for that. We have equal low LQ. All right, we have equal low liquidity. So basically, when we have liquidity lying below this low, it is very much possible that we would see price come down and do this and grab this liquidity, because whenever price sees liquidity, price is always after liquidity, because the people who move the market are after your money. So retail traders are buying, and then we have liquidity below this low, and then what you get to see is that price will come down, grab all this liquidity, and then boom, we have what? Price go up above. Yeah. Now, I think I should actually even save this. All right. Now you get to see that when you apply your Fibonacci, when you apply your Fibonacci now, will you get to find out that okay, are you buying from a discount price? Now at this point, you get to you want to find out, all right, are you buying from a discount level? Okay, now if you're buying from a discount level, then you have one confluence, which is from your liquidity metrics, that you're actually buying from discount. The second confluence is that you've had internal liquidity taken. Very important, because if price does not grab this liquidity acts more like a magnet to price. In most cases, yeah, in most cases, you will see price coming to grab sell side liquidity. Now, this is what we call range trading. This is how you trade a range. All right, because now when you get to look at it, all right, you have a range, you have a trading range. Let me take away this Fibonacci retracement tool first of all right. Now you have a range. Let me also take this one out. You have a range. Now that range that you have is this. You have this swing low right here, okay? Let me change the color of that. You have this swing low right here. And then whenever the retracement starts, right? Wherever the retracement starts from is what? Is your range. So you have this swing low right here. And then you have what? This swing high. Now, this whole space, yeah? This whole space from this high to this low right here is what? Is a range. All right, that's why I see I tell this high and this low. This whole space is a range. Now you have to look to the left side of your chart and see, okay, I have this low here. I have sell side liquidity here, sell side liquidity here. You apply your Fibonacci retracement to measure, know that, okay, you only want to be buying when price is below the 0.5 level, okay? Then you get to see that price will definitely come down, grab sell side liquidity, and then push up. All right, now at this point, you're going to have price pushing up from most likely what we're going to be talking about in future classes. You're going to have price push up from maybe an imbalance or an order block or a transaction week. Don't worry, I'm going to teach you guys all these things when we get to the whole entry scenario stuff. But now I want you guys to understand the idea of liquidity. Am I making sense? If you understand what I'm saying, I want to see it in the chat box. Just type sense or type anything you want to type and send to the chat box so I know you are following me. If you are following me, type in something to the chat box so I know you are following me. I can't see anything yet. Doesn't mean nobody is following me.